Thank you for those who are on time here. We're just going to give it about one more minute. A lot of people are registered here, so just give it one more minute and we'll go ahead and have some fun here. Good morning, good afternoon, depending on where you are in the country. My name is Josh Elohim. I'll be your speaker for today. Thank you so much for all getting on the call here. Just some quick housekeeping for the purposes of this call. Everyone's going to be muted so we can get through this smoothly. If you have questions, you can put those into the question box there. If for some reason you do not have access to our software Quote and Apply, you can go into the chat box. I put a link that you can go ahead and sign up for the software. So without further ado, our webinar today is on helping your business owners stay protected. Again, thank you so much. Hopefully everyone's safe amongst all this craziness. Everyone could hear me. I usually have people saying hello at this point, so I just want to make sure I didn't do anything wrong here. If you can hear me, just give a quick hi in the old question bar there, so I can see that we're good to go here. So again, helping business owners. Ken, thank you, Ken. Appreciate it. I think business owners are some of the most underserved people that you work with. It's easy to do work with an individual, but when it comes to businesses, there's a lot of needs. And a lot of the time they have more needs than what the individual person that you insure has. So let's go into our software here. Hopefully everyone could see my screen here. I'm just going to put in some real basic information. I think you've all seen this at this point, so we can run through this pretty quickly. This is our Quote and Apply software, and minus us talking, we can get stuff done pretty quickly. So there we go. No thanks. All right. So ideally, I need some insurance. I'm a business owner. What are the different types of insurance that we see here? Well, the first thing is going to be key man. It's just like it sounds like. I have a key employee that I cannot live without as a business. If I don't have that person, I'm going to be in some major trouble for a business. So I want to insure that person. People think that a key man policy is this really sophisticated plan. The only difference is the ownership. How is the policy being owned? That's really it. So instead of it being owned by that individual, it's owned for and paid for by the company. Now, what's normally used there is term insurance. What is this person worth? You know what? There's $1 million at stake here if I lose this person. And how long do I want to keep that person for? Well, here you go. It's term at the most simplest form, it's term insurance, right? How long do I need this person for? If they're not here tomorrow, what's at stake? That's what I want to do, and it's called key man insurance for a key person. Now, normally term insurance is used here, not because it's always the best fit, because the agent doesn't always have the confidence to talk about permanent insurance. We're going to get into that in a second though, okay? Again, the first option here is key man insurance. Any questions pop up, this is pretty straightforward. The only real difference is the ownership, right? How is this policy being owned? That's really it. And I think you've all gone through the application, which I will show you at the end of this webinar. When it's going to ask, is the insured going to own this policy? And the answer will be no. The next question that pops up, how do you want to own this policy? It'll be owned via the business. If that key person's not here and they're gone, then guess what? The beneficiary is the business and also the payor, so they have the control of the policy. If the business decided, hey, to use this maybe as like a golden handcuffs, they can gift that policy to the employee as well. That is an option. The next thing we see a lot of is a buy-sell agreement. So now I have two business partners, right? 3, 4, whatever the number is. I have more than one person, right? And A lot of people do not know this, but if you have a business partner, and let's just say that business partner is not here anymore, do you know that you're potentially at risk of working with that business partner's spouse or significant other? A lot of people don't know that with the business owner. And let me ask you a question. Do you want to work with your partner's wife? And most people will say absolutely not. Okay, well, do you have the $500,000 that's needed to buy that person out of their part of the ownership? I do not. Hence, this is what this insurance is for. Now, whether you have 2 business partners, 3, 4, it just kind of multiplies from there. So how does this work? So how do I figure out the value of what we should be doing for life insurance? A simple question is, what is the business worth? That's it. What is the business worth? And a very easy way, so once you figure out what the business is worth, let's just say to keep it easy, it's worth $1 million. I have 2 business partners. So what I do here is I can literally have I'll take out 500,000 for each person. It's that simple. Now, the only difference when you do the ownership part, is this person going to own the policy? You have each person own the other person's policy. We call it a cross purchase, right? And so each signer will be the other person. And that way, in that situation, if something does happen, that person passes away, you have the life insurance set up to buy that other person out of the contract. Now, what some people do is they'll get what's called a buy-sell agreement. So a great question you can ask your business owners is, do you have a buy-sell agreement in place? If the answer is yes, which unfortunately a lot of people have this right here, right? That's how people do business. But if they have a buy-sell agreement in place, then the next thing is that buy-sell agreement funded? What do you mean? Well, you took the time to go to this attorney to draft up this agreement, but you don't have it funded, so you have no way to pay for it. And that's where life insurance can come into play to make that payment. Again, just like the key man policy, term insurance is normally used for this. It is the lowest cost. Is it always the best solution? No, because why? You may all know this already, but you have less than a 2% chance of actually cashing out in a term policy. It's great money for the life insurance carrier, but term insurance is used a lot because it's very low cost. But the second thing is that it's also because the agent is not necessarily comfortable having that conversation. Everyone on the call here, just so you know, I'm very comfortable having this conversation with you / for you. So my goal would be, put me to the test. Use me here. Let me get on the phone with your clients and you can control the meeting, but I can go in here and I can educate people on the first part of what we talked about, but next is what's really, really important. I think hopefully most of you can have that first conversation we just had. Is it a key man policy? Is it for a buy-sell agreement, or is it for a buy-sell? Term insurance. Hopefully you can all have that conversation. If you need, I'm also here as well. I don't make $1 till something gets sold, so I have every incentive to help you all out here, okay? So hopefully you all understand that. All right, so let's get into the more sophisticated stuff now. Let's just say that we took care of that term insurance, right? Or we showed them the numbers. I always tell people, you don't have to, once you give someone what they're asking for, then the door opens to offer them whatever you want. So let's just assume that we've given them all the options for term, for key man, and we've also given the options for buy sell. Okay, so the next question I like to ask them is that, hey, are you guys putting money away in your business at all? Are you guys saving any money? And most of the time the answer is yes. Well, when I do that, I'm going to click on this accumulation here, okay? Because the goal is education. We're not salespeople. We don't sell stuff. What do? We educate people. And these business owners are not educated on what permanent insurance is, what cash value life insurance is. They don't know. So what I like to do is we go into here now, right? And before I get into numbers at all, we're all visual people. Let's talk about why are we having this conversation. Hopefully you've all seen this before. This is a great tool. By the way, I clicked on more details here, and then I clicked on tax-free income. Does everyone see that? There it is. So that's how I got to this point right here. So we know everyone hates life insurance, right? Including myself here. But what do I hate more than life insurance? Paying taxes, right? There it is. So this piece shows you my top income earners for my top tax rates. And when you add this up in California, we're close to 50%, right? Now I call this the bucket sheet because this is important. Where is your client's money right now? Well, if you look here, we first have the tax deferred bucket. This is like our 401ks. To me, this is a great bucket. If someone's willing to match you a percentage, I would put that percentage of my money in there. If it was 7%, that's what I put in there. Now you can ask the business owner, do you have a 401k set up? Yes, I do. This is a great vehicle. I'm a firm believer. I like this. Okay, great. Let me ask you a question. Are you putting money in this bucket here, the taxable bucket, your stocks, your bonds, your mutual funds? I do have money in there as well. Another great vehicle. And then, so now, as long as where else can you put in $100,000 and earn $1 million? As long as you're willing to also lose it all, right? But again, it's a great vehicle. My last vehicle is my tax advantage bucket, which is like your Roth IRAs. Now, this is another great bucket, but the question is, if you make too much money, you don't qualify for that bucket, correct? Does that make sense? I would never say to put all your money into life insurance, and we sell life insurance here. I think that'd be foolish. Why? These are great vehicles that your clients can put their money in. So again, really good opportunities here for them. So if they have money in these buckets, I tip my hat, I say, you're doing a great job here. Now, let me tell you what the challenge that most people don't talk about. A lot of people think about growth, right? Growth, make as much money as possible. What do we forget about? Distributions. That's what we forget about. So when I want to pull money out of these three great buckets, does everyone see these little spigots right here? Well, how am I going to be taxed on these three great buckets, pre-59.5, all the way to 70.5? Because not how much money you make, it's how much you get to keep, correct? So if I didn't have your attention before, I have it now, Mr. Business Owner, because now we're talking about your money. So really, here's kind of your sale for the business owner. Now that I've shown you where your money is, what if there's a way if I could show you how to create non-reportable tax-free income? Is that something you'd be interested in? No one said no to that in 11 years, just a heads up. So, well, there's one more bucket you may not be familiar with, and that bucket's called life insurance. And most people say, I thought life insurance was for a death benefit. No, it's called term insurance, right? So how am I being taxed on this different bucket here, pre-59.5 up to 70.5? And as you may or may not know already, the real beauty of cash value life insurance is that it grows tax deferred, and I can take the money out tax free. That's the real advantage right there of cash value life insurance. Is this bucket designed to beat this bucket right here? Absolutely not. What a lot of people fail to realize that what this bucket does for you is it protects against these three other buckets, right? Why? Because again, if I want to pull money out of this contract, I'm going to be taxed on these three buckets right here pretty heavily, these two buckets pretty heavily right here, right? Well, what is this fourth bucket doing? It's protecting because you can pull money out of this fourth bucket if and whenever you want for whatever reason you want. Now, here's the kicker with the business owner. Do you know that you can pay these premiums out of your business? Oh my goodness, where do I sign? I mean, I've seen the door fly open so many times here when they realize this. Now, obviously, when it comes to write-offs, that question does come up. I say consult with your CPA, right? The real beauty of life insurance is you pay for it with after-tax dollars, which allows you to pull that money out tax-free on the back end, right? So let's go back to our quote here, okay? So now I can go into here, and if I wanted to do, if they have a certain death benefit they want to have for permanent insurance, then I would do what's called, if everyone looks here, a max non-MEC. That means the most money I can put in for $1 million death benefit. That number's right there. So you can dump a pretty heavy chunk of change into these policies. Let's say that, you know what, I've already taken care of the term insurance. I got the highest death benefit for the lowest cost. That part's done. Now I can change this to, please listen very closely here. I'm a big fan of what we call a minimum non-MEC, which is the lowest death benefit possible. Now, what this does, that two very important things happen for you, Mr. Client, Mr. Business Owner, that you're going to really appreciate. The first thing is when I lower my death benefit, I also lower my cost of insurance charges. That makes sense, all right? If you buy this policy today, Mr. Business Owner, and you're not here tomorrow, the carrier would be on the hook for $1 million, correct? Well, there's fees involved there. That's why there's cost of insurance charges. But the second thing is that it also lowers the agent's commission. Sorry, Ken. So I joke around with the business owner. I say, hey, well, if the money's not going to the carrier, the money's not going to the agent necessarily. Where is it going to? Into your policies so it can grow faster. Does that make sense, everybody? So if you look here, the cool thing about doing a minimum non-MEC is I can ask the, hey, Mr. Business Owner, how much money are you comfortable putting into this policy on an annual or monthly basis? Let's just say they're like, you know what, I can do $1,000 a month. I'd like to start there because we can always go up or go down. Well, I don't want to pay these premiums forever. Is there any other options? I'm glad you asked that question. I can do a pay to age 65, and then my favorite is a 10 pay. So I could just pay for 10 years, right? Now I'm going to show max distributions from 66 to 90. So I hit the rerun button. Never in the history of our business have you, an agent, been able to pivot so quickly right in front of your client. Did everyone see how fast that was? I mean, lightning fast right in front of the client here. I can do this here. If I want, I click on that PDF button. A lot of reason why we have success is not because we're these incredible salespeople. It's because the software. 90% of us learn visually, right? So what can I do with this software is I can dance right here on the spot, right in front of the agent, right in front of the business owner, on the spot here. So I can dive right into the meat and potatoes here, and I can answer your questions. Does everyone see how cool that is? How fast that is? This is a game changer for our business because this used to take 5 or 6 meetings to close in the past, but because I can do this right on the spot here, I can answer all your questions. This is great, Josh. What about this? What about that? How does this work? I can answer, I almost want to say 100% of your questions here. We'll leave it at 99.9% there. There it is. So if you look here, we have a male 44, preferred non-tobacco, right? The lowest death benefit possible is that 198. That's the lowest we can go without MEC in the policy. If we need to go back to what a MEC is, modified endowment contract. To take one step back, these contracts were so good in the past. Life insurance, 40, 50 years ago, you could buy a policy, dump in $1 million, take $1 million out, and would it be tax-free? Well, the government stepped in and said, whoa, 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 this is too good to be true. We need to get our piece of the pie. So they created that MEC, that modified endowment contract. And what that does is, if you MEC the policy right away, you're going to have to pay taxes on the first dollar that comes out. So that kind of avoids the whole purpose of we're having this conversation. So just to remind you all, we're running this at a minimum non-MEC, which is the lowest death benefit possible, right? Allowing me to maximize the most cash I can get out of the policy. So here we go. Let's go back to our illustration here. This is an IUL, Index Universal Life. To keep it simple, we had variable life insurance in the past. Variable was great. Market does 20%. You get 20% credit to your account. You're like, yes. Well, next year, market does minus 20%. Now you're absolutely devastated. It's very hard in these policies to recover from a negative loss. So the life insurance carriers finally got smart and they created something called an IUL, or Index Universal Life. Let's use the same exact scenario. Market does 20%. You don't get 20. You have a cap of anywhere from 8 to 12, depending on the carrier and the product. Okay, so I get my cap. Next year, when the market does minus 20, now I have a zero floor. So your client's going to participate in the upside of the equation, but not the downside. Does that make sense, everyone? Is this designed to beat the money that people have in the market? Absolutely not. It's not designed for that. That's why you have money in the market. Let's go for it. Let's get the most bang for our buck there. It's not designed for that. What is it really designed for? It's designed to protect all these 3 buckets, because if you have to pull out 20, 30 grand, you don't want to pull from these buckets because most people are going to be before 59 and a half. They're going to get hit with some major tax consequences. We don't want them to do that. We want them to pull from this bucket right here. And let's go over here. So real quickly, some of the quick highlights here. So we're putting in $12,000 a year. Again, we're not doing that forever. We're doing that for 10 years. So we're putting on $120,000. Some questions that come up. What are the fees in here? My accumulation value is what's currently growing in the policy right now. So I take my $12,000, I subtract it from my $99.19. Those are my fees for the first year. My surrender value is if I say, hey, I want to take every dollar out of this policy and walk away. Clearly, this is not a good investment if the business owner wants to do that. That's not the right fit here. But if you look, if I scroll down here to about year 11, does everyone see that number is the same now, how it matches? So it's the same exact number there. That means that my surrender charges are gone at that point. There's always going to be cost of insurance charges, and I explain why, but my surrender fees are gone. So here's how this works. We're running this at a 5.74% interest rate. Now look at, I put in $120,000. I let this money accumulate over time, and at my retirement age, I have two options. I still put in 120, correct? I have access to about 235,000 of tax-free income, or I can use this to supplement my retirement as a business owner, where I can pull out about, call it 18 grand from 66 all the way down to age 90. And at that point, I pulled out $328,000 of tax-free income. The question I like to ask business owners and most people, where do you think taxes are going? Are they going down or are they going up? And obviously, most of us will say taxes are going to be going up. Well, there's three reasons why I tell people that taxes are going to be going up. The first one is our deficit. What are we at, like $35 trillion right now? I mean, the government's just giving away money. It's been absolutely crazy. That's the first reason. We have to pay that back somehow, right? Second reason, our healthcare system. What a nightmare, right? And then the third reason is Social Security. Is that going to be there even when we potentially need it? There's three reasons why we feel like tax is going to be going up and not down. So what are we doing here for you by doing this policy, Mr. Business Owner, is we're creating a fourth bucket that you don't have access to. And that bucket is a non-reportable tax-free bucket that you can pull from if and whenever you want. So some other points that they'd like to hear. So this is what we call a flexible premium contract, universal life. So what that means is we're showing a 10 pay here, right? Let's just say things are going really well. I can pay year 11 if I want. If I like how it's going, Mr. Business Owner, you can just keep paying. Vice versa, let's say you have a rough year in year 7. Because you have cash in the policy, you have the ability to take money out of this policy if and whenever you want. So you have the ability to use the cash from the policy. The other thing is that I need 10 grand, I need 20 grand. Because you have, so what I say is after the first year, you want to wait for the first year, you have access to this money if and whenever you want for whatever reason you want. A lot of people are familiar with the 529 plan for their kids. Listen, it's a great plan. The only thing that I'm not a big fan of is you have to be used for health or education. Here, you can set up a plan on little Jimmy here, right? And if he doesn't act right, you can do whatever you want with this money here. So look at, I have access to this money whenever I want. So as a business owner, if I need 10 grand, do I want to pull from any of my other buckets? Probably not. What am I earning with my money in my bank account right now? Having my business money in the bank? Really nothing, right? I would never say to put all your money into life insurance, Mr. Business Owner, but I think you should be looking at putting a piece of what you're doing into here. This is not a secret. I love to say this is a new thing here. This is really just compounding interest. I'm sure Ken remembers that in his CPA class and accounting class in college. The professor that if you put away $1 a day from 18 to 65, you'll be a millionaire. I didn't listen, Ken. I'm not sure if you did it or not, but so this is really just compounding interest. The more time you have, the faster this money grows. So who does this look really good on? If it's a 20-year-old, a 30-year-old, it looks even better. And we know that business owners are getting younger and younger a lot of the time with these tech companies and all that stuff. So two more points and we're done here. This whole tax-free, like it's kind of a gray area. Like, is it really tax-free, right? So if you look here, here's how I explain it. Again, I'm a very simple person. Whatever you put into this contract is called your basis. So I put out 120 grand, right? Now, what that means is that I've already paid taxes on the front end of this money here, which allows the money to come out tax-free on the back end. Does that make sense, everybody? So here's how it physically happens. So up to my 120, I'm going to call the carrier in this situation nationwide. I'm going to take that money out via withdrawal. It's just like calling my bank and saying, hey, I want to take money out. They don't ask any questions, right? The next dollar that comes out of that contract, now I'm going to switch over to a loan. And you may have heard the terminology, become your own bank, because what happens, this carrier might charge me 1 or 2 or 3% to borrow the money. But then what they do is they credit me back that same 1 or 2 or 3%. So it's what we call a wash loan. Now, here's the key factor. Listen close. As long as you never surrender this policy and you die with it, what's the death benefit to the beneficiaries? Anybody? Anybody? The answer I'm looking for is tax-free. So let me rephrase that. As long as you never die, you never surrender this policy, you die with it, you're never going to have to pay taxes on the gains in the contract. So in this hypothetical here, we put out 120, right? Let's just say it happened this way, which we know it's not going to be exactly here, but let's just say, so even after taking out 328,000 out of this hypothetical here, I still have a $29,000 death benefit policy here. So I'm never going to pay the taxes between this number and this number because I'm going to die with this policy. I'm never going to surrender. And that's how the death benefit's going to be tax-free, because it's always tax-free upon death. Does that make sense, everybody? I got a little more into cash value more than I wanted to, but you see, I'm very passionate about this because unfortunately, a lot of people are not saving money as Americans. So what does that mean? We're working for the rest of our lives. And if you can give your business owners the ability to have a bucket that can grow, that's non-reportable, and that's tax-free, they just don't know about this. And it's your job to educate them on it. If you're not comfortable, I promise you, I am very comfortable with this sale here. Put me on the phone with your business owner. I do not bite. I will be very friendly. This is really almost my exact pitch here. I have a few more jokes that I give to loosen everybody up, but it's very, very similar. You're very smart, all of you. Get me on the call once or twice. You'll hit the ground running. You'll be able to do this yourself before you know it. So if you have any questions, please put them in the chat box for this here. Last thing I want to show you guys is for a business owner, long-term care. It's a really big issue. Hopefully everyone on this call knows somebody that's being affected by this right now. Did everyone hear about what happened in the state of Washington, where they made it mandatory to put long-term care, to have long-term care, or you're going to be taxed on it like they did for health insurance? We were getting calls from 30 and 40-year-olds asking about long-term care. Have any of you in your lifetime ever had a call from a 30 or 40-year-old asking about LTC? It's been pandemonium. Well, the cool thing about, I'm not a huge fan of traditional long-term care, meaning a standalone policy, because it's really use it or lose it. Well, in this situation, I can change my product here. Now, so I still like that cash value option, but how about we do a protection IUL? Does everyone see that? So now I still have the S&P 500 like I discussed before, but now by doing a protection IUL, I have the ability to be able to add what's called a long-term care rider. You can do this all in one right here. So watch this. So when I add the long-term care rider, hopefully you all know how this works. Quick little summary. I have a pool of money. I have $1 million death benefit. When I add the rider, it gives me a pool of money for long-term care. So what I want to do now is, let's just put this back to $1 million, right? If I have a long-term care issue, I can draw down from that death benefit dollar for dollar. Does that make sense, everyone? So in this situation, I'm going to add the long-term care rider. I can get up to 4% of $1 million or up to $40,000 a month to pay for long-term care. Again, I don't want to pay this premium at 80, 90 as a business owner. Is there any other options? I'll just do a 10 pay. You see, I like a 10 pay, right? And I hit the rerun quote. This is a game changer for your business owner, because guess what? Things happen. If you have two partners, what happens if one person becomes, unable to work? Who's going to carry that weight? Well, this policy can carry that weight so this is just like traditional long-term care. You have 2 of the 6 ADLs. I can't feed myself. I can't bathe myself. And then I have a 90-day elimination period, and I can accelerate the death benefit dollar for dollar. So I just added the rider. Does everyone see that? There it is. We have John Hancock, and we also have Nationwide for this, 2 options that I really like. John Hancock has 3 bells and whistles. They have the pool of money for long-term care, which is why we're having this conversation. They also have the cash value in the policy. We call it a living benefit. Those are both living benefits, right? What can I get while I'm alive? And there's also a death benefit. Nationwide has a true guaranteed UL, so they're really known for the pool of money for long-term care, and then maybe a guaranteed death benefit. Someone doesn't want to have the guaranteed versus non-guaranteed story. This blows my mind every time I see this. So look, here's a little summary of what we're looking at here. So we got a male, again, 44. Here's my 10 pay premium. Here's my $1 million pool of money for long-term care / death benefit. And then here's my 4% or up to $40,000 a month to pay for long-term care. And here's what it covers. Would you all agree that people want to get taken care of in their home and not have to go anywhere? This policy covers that. And then just to summarize this and wrap this up, I can dive down to the meat and potatoes here. So I'm really getting 3 really cool bells and whistles here. First thing I'm getting is I'm getting my my $1 million pool of money for long-term care, which I think is the real starting point here. A living benefit. What can I get while I'm alive? Just like that policy, I have some cash growing in here, so I put in 144. Look how cool this is. I look at the retirement age. So I put in 144. Look how much cash we have here sitting in our retirement income bucket. Does everyone see that? I never want to use the word free insurance, but you see how what you put in is sitting right here in retirement income. Does everyone see that? So again, this is why this makes a lot of sense for younger people now to start having this conversation. Do you know you can add this rider as young as 18 years old? Now, obviously, we haven't seen a lot of 18-year-olds here, but we are starting to see a lot more 30 and 40-year-olds. You're getting the same exact thing. You're just getting it at a much cheaper price. Because doing this at 60 and doing this at 40 is a whole different ballgame. This number would not be the same, if not more, at retirement age if you had a young, older person. Perfect. If you have questions on this, please put it in the chat box. I'm here to help as any way I can. Are your clients like, hey, this is great. What's next? We all know what that means, right? So I like to joke around. I'm like, whoa, whoa, whoa. I'm glad you like Nationwide, but guess what? They want to date you as well, meaning an application and an exam, right? So we all know this is like a 60 or 70-page paper app. So if I want, now I just hit this. I'll rerun that quote one more time, and then I just hit the continue button, and it will bring me right into the application. I'm going to run through this very quickly. So let's just, I guess we're going to go with this company. So, sorry, let's refresh this one more time. I see the questions starting to pour in here. So when I hit the continue button, does everyone see it brings you right into the application? There we go. Pretty straightforward. Email, phone number. I think you've all seen this before, so I'm going to run through this pretty quickly. Company address, auto-populates. I just got the email, by the way, about the app being started. Is this person employed? We'll just give some basic business information. Well, so we talked about, for all the stuff we're talking about today, between key man, between buy, sell, will this person own the policy? And the answer here is just going to be no. Who's going to own it? It'll be a business. Does everyone see that? That's how simple it is. That's what separates a normal term policy in an individual from a key man or buy, sell. You can also have the permanent insurance owned, the cash value life insurance owned this way, and you can have the long-term care as well. Just to make it easy, I'll say they will own the policy, and then I'll just say, again, trust, business, individual. We'll just say individual, Mrs. Doe, we'll say after wife, keep things going here. Contingent beneficiary to back up the primary. Income, assets, liabilities, put in the social, state. If the person has the existing life insurance, you would add the policy right here. Let's just say no and keep things going here. We have this, our built-in portal. So if you want to grab some medical records, this is a game changer for our business. I can pick my facility or type it in up here. Let's say it was UCLA. Username, password, connect. We pull those records instantaneously right on the spot. If we don't know it, you can hit forgot password or reset. You can also create an account or just say no. You can send a text message, let the client do it on their own free time, or just say no. So here we go, right to the medical questions. Now, again, this is life with long-term care. Pretty on purpose, I picked the longest one possible here, okay? So see if I can get through this pretty quickly. I had one agent say, can we get a button that says no for everything and call it a day? I was like, I love the way you're thinking. Carriers will never go for that, right? All right, we'll just know this up here. Again, this is long-term care as well, so you see why there's so many questions, right? This is about a 60 or a 70-page paper application. If you want, you can actually bind coverage in certain situations, or just plug in your routing number or account number so you don't have to ask about it again, or just say no. By a raise of hands, how many people absolutely hate exams because of the examiner, because of the yourself, because of the wholesaler, us, because of the exam? You have 4 ways to the client. You have 4 ways things can go wrong. How about a built-in calendar from exam 1 of real times to book your exam right on the spot here? I picked my date, I picked my time. We just booked the exam. It was that simple. Last step here, I can sign via email if I'm not in front of the client using Zoom or whatever software you use. If I am in front of them, I'll hit sign now. Or clients doing this 100%, the business owners doing this by themselves, they can also hit sign now. Or we get past this pandemic and you can meet your clients face to face, you would also hit sign now as well. So just like that, all the information auto-populates to a fully completed application. This is, again, a 60 or a 70. Look how long this thing is. My finger's getting tired here. So I'm sure you're all familiar with Docusign. You adopt your signature. I usually pass the screen, let the agent or the client know how easy this is, but I'll just, for time purposes, I'll just fly through this very quickly here. Sign, sign, sign. Fill in. This is actually the illustration you're signing right here. And hit finished. How about a 60 or a 70-page paper? That might be a record for me, by the way, in about, what, a minute and 50 seconds? Welcome to the future where life insurance is heading. We just completed a Life with Long-Term Care Rider app, as long as it gets, and this is available in all 50 states. So business owners have lots of needs, and unfortunately, we're just not filling them because we're just not comfortable having these conversations. Guess who is comfortable? Guess who's been sitting on the back burner for 11 years now? I'm ready. I've been doing this for about a year and a half now. I'm helping agents out. A quick testimony, I had a case for an agent. It was a buy-sell agreement with 2 business partners. It was gonna be around a $2,000 premium, not a bad case. I got on the phone with them. I just went over this exact presentation of cash value and long-term care. It went from a $2,000 sale to $25,000 a premium. It was very simple. It made sense. Everyone, these guys loved it. They're like, no one ever told me about this. I just learned more in the last 20 minutes than I've learned my whole life about how cash value life insurance works. Is it designed to beat what you're doing? Hey, Steve, how you doing, buddy? Hopple. Is it designed to beat what you're doing in the market? Absolutely not. That's what you're doing is what you're doing. It's great. This is designed to protect everything you're doing, your assets under management. If there are financial planners on the phone, we want to keep that money under management as long as possible. Life insurance allows you to, again, create non-reportable tax-free income, but also to pull from this bucket if and whenever you want on a tax-free basis. Last thing I'll show you here is that we have the ability in our boss system under marketing. We've built a template just for businesses. Does everyone see this here? Here's your template for your business owner. So you can plug in up to 100 emails and blast this out to your business owners. You can also go into here and hit HTML, and you can use your own email service. So again, this is you see, I'm very passionate about business owners. I feel like they're lacking in the Kraken when it comes to life insurance, and unfortunately, it drops onto our shoulders here. So help me to help you, to help me to help you. That's all I got for business owners with life insurance. So let's open it up for questions here. I really appreciate all your time. Get me on the call. All you have to do is go into your boss system and you see meet with Josh, just book a meeting. Just put in the headline somewhere there, we're meeting with a business owner. That's all I need. And even, I don't even know if I need that. But I'm ready to go. I'm ready to help out your business owners. Let's get some cases done here, okay? Thank you so much for all of your time. I greatly appreciate it. We'll give a second for questions, get some answered, and we'll let everyone go. Appreciate all your time. Have a blessed day, and just hang tight for a second to ask your questions. Thank you so much. Questions? All right, here's a few. So someone asked about, I get it, the whole tax-free thing, right? Like, is it really tax-free? That was a question that was asked. These business owners, I can't speak for anybody, but I've seen them, they figure out a way to write stuff off. It's not in my hands here to consult with your CPA, but they figure out a way, let's just say that, to get really creative here. So in terms of taxes, okay. So hopefully that's a gray area. I don't want to discuss that too much just because I want to keep it, consult with your CPA about that. How about that? There you go. Perfect. Someone said dual contracting. I already work with someone that we already have a relationship. Can I use the system as well? The answer is 50% of agents we work with already have a relationship. We completely get it. So because of dual contracting, we can set you up on a completely separate code. No harm, no foul. You don't have to choose. People work with us because they want to and not because they have to, if that makes sense. And we have no minimum. We definitely don't have any maximum for how much business you can do here. Hopefully that answers your question. I'm going to do one more here because I know we're past time here. Someone asked about commissions. I love it. I can't finish my call until someone asked about commissions. All the commissions are in your boss system under products. You can see commission. Just so you know, we can help you with life insurance. We can also help with annuities, disability, and long-term care. All the commissions are right here at your fingertips. This is most agents' secret about they want to keep it secret. We sleep very well at night because we disclose everything here, okay? Last question. Now, someone asked, how do we get so I can send those out if you want to email me, if you want to send me an email, but it's right here under your quote and apply. So you go to quote and apply. I'm not going to pull up the whole thing. You go to quote and apply. You run your permanent insurance, and then you'll see it says more options, and you can actually click on that PDF button sitting right there. But reach out to your marketing manager. He can get those for you. If I'm your marketing manager, call me, and we'll get those for you really simple, okay? Thank you so much for all your time. I like to keep this around 30 minutes. There's a lot of moving parts with business owners, so we're at 43 minutes here. But again, I really appreciate all of you. Let's get our first business owner case here going to turn it from $1,000, $2,000 premium to 25, 50 grand. I see it happen all day long. Help us to help you. Everyone have a blessed day. Thank you so much.